Well, hello my YouTube subscribers. Thank you very much for joining me for this week's market update and trade alerts. So let's jump into it. Right now we're at all-time highs on the SPX, the best gauge of the overall US stock market. When we look at our opening range, which is 92% accurate, we can see that we are now in bullish mode. We've broken above the upper line and we're in bullish mode, and we will reset that in about a week's time on the first trading day of November. Now, you will see that we've had actually 7 days in a row to the upside. So it's quite a good move from around, what's the low there? 4330 to 4544, right? So a pretty nice run here, 7 days in a row. And now we've got a doji here, right? So you see that doji, which is the colored in bit, right? The real body of the candle is very small. So when you get a nice move like this, a bit of a trend, and then an indecision doji candle, this is something we want to pay attention to. If it does close above that with a nice strong green candle, guess what? We're moving higher again. If we close below that doji, normally will signify a pullback, probably to the 21 EMA. So keep a bit of an eye on that. When we look at our workspace, we can see here that, just bring the NASDAQ in a little bit there. So NASDAQ's still grinding higher there, still very much within an uptrend, not quite at all-time highs, but still above the 21, showing some strength there still. Russell 2000, economically sensitive Russell 2000 in a trading range, sort of going sideways. I've utilized some very good non-directional type trading with that index and done very well. I've already spoken about the S&P 500. The Dow Jones Industrial Average, the oldest of the indexes, is at all-time highs, looking strong, and transports have really moved up considerably just recently. So we'll see whether they can clear their 16,000 round number resistance. But everything there overall looks pretty bullish. If we look at the sectors, drill down into the sectors, bit of weakness there with biotech. Okay, a little bit of weakness there with biotech. Could be forming a bear flag, so we'll keep a bit of an eye on that. But that's the only one of the sectors we look at that is below the 21 EMA. Second largest sector in the market, financials, looking very strong. Tech still holding up, close to all-time highs. Consumer discretionary looking good. Bit of sideways trading range there with retail. And energy doing very well. So overall, again, trading what we see and not what we think, things are still bullish. Okay. Now, there has been a string of positive earnings surprises. We know we're in third quarter earnings season, and these string of positive earnings surprises, this is the second week in a row this has happened. So, the third quarter expectations have been met and actually surpassed in many cases. So, things are still looking good on that front. There has been some worrying signs in the European countries about COVID, some numbers there, but everything else at the moment still looks quite bullish. We know that can change rapidly, but at this point, trading what we see, it looks pretty positive. Now, Bitcoin, a few people asking me about that. Yeah, certainly had a big move, from 40,500 to all-time highs, right? Really having an incredible move there, over 67,000 there at one point. So certainly showing some really good strength. Bit of a pullback here, that's normal, right? Down to that round number support level of 60,000. A bit of rejection there from the sellers, right? The buyers stepping back in, driving it back up now to almost 63,000. I believe going forward, and certainly by the end of the year, we'll be seeing all-time highs again in Bitcoin, okay? But a bit of a pullback like I was looking for. Economic news, there are some certain economic news announcements that are coming out that could impact the market. New home sales, consumer confidence, no doubt. Durable goods, petroleum status report, GDP, total economic output of the United States. That's certainly something traders will key off on that day. Jobless claims and consumer sentiment and personal income and outlay. So there are quite a few things coming out as far as economic news that we need to be mindful of as well. So having said that, let's look at some positions that we are in with our longer term / retirement account. Our trades that we had on with APPS. We set up a collar trade on APPS, Digital Turbine. That turned out to be a very nice winner, 5.3% for the month. We also sold a cash secured put option on APPS. That was a winning trade as well. So we made some nice income there. So we're out of both of those trades there on APPS. Two good winning trades. Now, Palantir, we're still in a collar trade here with Palantir. In fact, it's a covered call now. So it's just, buying the share and selling calls against it. Every 100 shares that you have, you can sell calls against that, and that's what we've done with this particular instance, with this longer term account here. More specified for retirement accounts. We have now sold the 30 strike call for the 19th to the 11th, so let's have a bit of a look there at Palantir. All right, let's have a look here. Okay, so trading around 24.43, we've sold the 30 strike call for the 19th to the 11th. Just continue to hold that for now, and we will see what happens. We also sold the 20 strike put option, so we agreed to buy it at 20. 20 is a very good price, I believe, for Palantir. We got paid $66 a contract for doing so, right? So we choose the price at which we want to buy the stock, okay? The market doesn't determine that, we do, right? And we do that through selling cash secured puts, and that one's looking really good, okay? So nothing to do there with Palantir, all looking good. The cash secured put option we sold on Tesla, that was a winning trade as well. We're out of that one. And then CleanSpark was a Bitcoin mining stock that we looked at. We looked at this and we said, look, I think by the end of 2023, it could be as high as $80. We're in one of the most lucrative industries in the world right now, mining Bitcoin. So we set up a covered call on this trade. We bought the stock for $14.53 and we sold the out of the money $17.50. If it remained above $17.50 come the 19th to the 11th, we would have made a 26.6% return. That could still happen, right? So let's have a look at what's happened since we got into CleanSpark. Big move here, right? Went as high as $18.63, right? So it had a big move up. Now it's having a little bit of a pullback here. It's pretty normal. Nothing really to do there. Trade's looking really good, okay? Now, Marathon Digital, I was concerned that the Bitcoin could hit an all-time high and then pull back. Well, that's exactly what happened. So what we did is we sold the cash secured put option on this Bitcoin stock, and we sold it all the way down at 40, okay? We received $183 a contract, or 4.6% return. Again, for agreeing to buy the stock at a price that we want to buy it for and being paid day one, right? Something that Warren Buffett does as well to acquire stock. So let's have a look at this Marathon here. We've agreed to buy it down here at 40. Okay, so, and we got paid $1.83 per share to do so. Far better than just buying a stock by itself, okay? Much bigger returns, much easier to manage trades, reduce your cost basis in the trade. It is a far superior way of doing it. So I've agreed to buy it down at 40. We're almost at $50 right now. Trade looks good, right? Nothing to do there. Continue to hold, looks great. The other one we had was on Riot, another Bitcoin mining stock. I believe this stock, with my research, by the end of 2023 could be as high as $75. So I do like this one going forward. We sold the 25 strike put option. Again, we're agreeing where we're going to buy the stock, not the market, okay? So we have a look here at Riot. Right now it's trading at 28, and we agreed to buy it down at this support level of 25, okay? So right now that trade's looking really good as well. One or two things can happen with these cash secured put options, right? You can finish above the 25 strike that you sold the put option for. If that happens, you keep the money, you don't buy the shares. If it finishes below 25, we still keep the money, but now we buy the share at the price that we chose, and we were paid day one. So either one of those scenarios we are happy with. Now, a new stock or a new trade that you could consider if you choose to is another Bitcoin mining stock, Hut8 Mining Corp. All right, voice is a little bit sore. I've been talking for the last 2 days for my UK and my United States members, and I did it live for them, so I was up until about 2, 3 in the morning. Anyway, adapt and overcome. Now, Hut8 Mining Corp right now has around 4,240 Bitcoin. They're going to continue to mine more of those, and going forward I believe this will be a company that could be worth a lot more than what it currently is. It's operating in a very lucrative industry. You know, Bitcoin mining companies are making around $4 million revenue an hour. To mine a Bitcoin costs around $9,200 with a price at $62,000. Happy days, right? So my price prediction by the end of 2023, based on my maths, is around $19. So what I want to do is, I want to choose where I buy the stock and at my price, okay? So I'm going to agree to buy this at $10. At $10, I'm going to receive $1.60 day one. So if I have a look at this, let's have a look at the actual chart. Right now, it's had a nice move and having a bit of a pullback, potentially to the 21 EMA. I'm going to agree to buy it down here at $10, okay? So I'm going to agree to buy it there, and I'm going to be paid very nicely for agreeing to do that, right? For agreeing to buy it down at $10, which is, you know, considerably lower than where it is right now. So I'm going to receive $1.60 or $160 for every one put option contract I sell. I'm going to do this for the 17th of the 12th expiry, okay? Which is around a 14.3% return, which is fantastic. One of two things can happen by the 17th of December. It can be above $10 or it can be below. Okay, if it's above 10, we keep the $160 a contract, we make 14.3% return in 53 days, and we don't buy the stock. If it finishes below 10, we still keep the $160 of income for selling the put option, and now we do what we said we were going to do and buy the stock at $10 with a cost basis of $8.70. So that's what I'm doing there. That's a new trade there. If you wanted to know how to set that up, again, send an email to support@cashflowoptions.com.au if you want to know, if you want me to continue to show you how to place these trades. So you just type in Hut there into the option chains, click on enter, Stock Smart. Now we're doing this, make sure we get the right expiry. We're doing this for the 17th of December. Okay, so we scroll down to the price we want to buy it at, which is $10. Go across to the put side and click on bid because we're selling. Okay, it then appears here in the order box. The midpoint there would be $1.60. Okay, and you would submit, and there's the order right there. Okay, transmit, and away you go. So that's that one. Now, the next one, or the last one that I've got here for you is Cliffs Mining. Okay, this is a steel mining stock. Let's have a look at this now. I do like the look of this one for several reasons. One of the reasons is that it is relatively cheap, right? I believe it's undervalued for the amount of revenue that it is generating right now. Okay, so steel is, the price of steel is performing very well, and this company, I believe, is about to have a move higher. Held by institutions, 73%. Held by insiders, right? People that work for the company, almost 9%. That's quite high. So, you know, they've got some skin in the game. People that work for the company are benefiting directly from the company being profitable. I like that as well. Return on equity, goodness me, 81.46%. That is certainly well, steel mining, steel producing stock. I think I said steel mining stock. That's the 3 o'clock in the morning kicking in. A steel producing stock, 81.46% return on equity, shows the company is very well managed, and it shows that the owners that have invested in the company are getting a very nice return. So that's fantastic. Something over 20% is great. Now, the thing that grabbed my eye was this, price to sales ratio, 0.81. Wow. Now, what this is the market cap, okay, the share price times the amount of shares that have been floated on the exchange, the market cap of the company, divided by the revenue, okay? So as the revenue moves higher in comparison to the market cap, this price to sales ratio will become lower. So the lower it is, the better it is. Something under 1 is fantastic. I mean, you think back to Google in, not Google, Amazon. You think back to Amazon in 2003, right? Amazon in 2003 had a price to sales ratio of 1.83. So, as its revenue increased, its price to sales ratio decreased, right? Went down. The lower it is, the better it is. From that point, when it really got attractive and undervalued with a price sales of 1.83, it surged around 8,000% from there. Am I saying that this steel producing stock is going to surge 8,000%, right, over the next sort of decade or so? No, not necessarily, right? But I do believe right now it's undervalued for the revenue that it's producing. On October the 22nd, the steel producer soared nearly 13% after swinging to third quarter earnings per share of $2.23 as revenue more than tripled. So revenue topped expectations, obviously, surging 265% from a year ago. So I like the sound of that. Let's have a look at the chart. CLF. Okay, so we can see a nice big move on some strong earnings. I believe this stock will move higher from here. So what I'm going to do is I'm actually going to set up a conservative collar trade on this for our retirement / longer term trades. We're going to buy the stock for the current price of $23.85. We're going to sell the out of the money 25 call, okay, for the 19th to the 11th expiry, bring in $90 a contract. We're then going to buy an insurance policy for this stock we're buying at 20. Okay, so some cheap insurance there at $24 a contract. So the price of the stock minus the call premium, money we're bringing in, adding the cost of the insurance, gives us our break even or our cost basis of $23.19. Now, if it finishes above the sold strike, 25, we will sell the stock at $25. Okay, that's what we're getting paid to do. So $25 minus our break even of $23.19, that would give us a 7.6% return in 26 days. Beautiful. If it finishes below 25, we still keep the income for selling the calls, and we sell another lot of calls against that stock in December. Okay, so I like that one, very conservative. I like the look of that trade. Fantastic revenue growth, and I believe the stock will move higher as a result. So there are two new trades for you, and our Clean Spark trade, we're doing very nicely on all of those. Let me know if you enjoy the content. Let me know if you want me to set these trades up. So, something like CLF, it would go like this, right? Let me know if you want me to continue to do this. The way you let me know is to send an email to support@cashflowoptions.com.au. Remember, the Money Wheel program is coming out in the next couple of weeks. A lot of people have been talking about that. It is going to be huge. I'm going to really show you guys some really powerful techniques that I use with my Money Wheel strategy I've been using for 2 decades. So, Sean, how would I do a covered call here on CLF? Okay, here it is. So we go File, New Window, and we go down to Option Trader. Okay, click on Strategy Builder, Add Stock. Make sure you've got the 19th of November selected as the expiry. We're going to sell the 25 strike call option. So we click on the bid side, and we'll get around 90 cents for that. So if we look at this and we go buying the stock for $23.85, because that's what it's trading at, right? $23.85, okay. So buying the stock for $23.85, and if I receive 90 cents, I should be able to get filled on this at $22.95. So let's have a bit of a look. Let's see what the $22.95. So let's type that in there. $22.95. All right, now if you wanted to buy multiples of, you could click here and you could, click 10. So you'd sell 10 call options, and then you'd be buying 1,000 shares. Every 100 shares you buy, you have to sell 1 call option against it. So you can change the multiple there if you wanted to. You then transmit, buy Riot, same thing as a covered call, same means exactly the same thing. There it is there, cost 2,295. If it is filled at that price, we then transmit and we are done. Okay, so that's the end of that. That's how that works. So that's how you would do that. And there is the 2 trades for this week. All right, so let me know if you enjoyed that. We'll be back next week with more content. Let's watch the market this week and let's see whether it does close above this indecision point and move higher, or this acts as a turning point for the market to retrace. So we'll have a look at that as well. We reset our opening range on the first trading day of November, so that's coming up soon as well. And we'll keep a close eye on Bitcoin, as we have several positions in Bitcoin mining and related stocks and proxies. All right, guys, thank you so much for listening. I will talk to you again next week. My name's Allison. All the best and bye for now.